Hello everyone and a warm welcome to all our viewers today. There are anywhere between 60 to 70 million micro, small and medium enterprises in the country, and these businesses are rightly called the backbone of the economy. Their contributions to nation building have been staggering, and their role in providing employment to millions of Indians demonstrates their ability to carry the weight of the economy on their shoulders. The often repeated figures, 45% of the country's industrial output and 40% of the total exports, further demonstrates the indispensable role of small businesses. However, being small is not easy and it comes with tremendous challenges. Problems around scarce cash flows, disruption of business activity, shortage of labor, difficulty in raising capital, lack of ease of doing business have plagued the sector for decades. However, there are silver linings. These are businesses that have overcome challenges, big and small, to grow and increase scale. These are businesses that have chosen to innovate and demonstrated keen business acumen in testing times. We recognize the hardships faced by MSMEs, and the ETRISE Top MSMEs Ranking program is an endeavor to showcase businesses that stand apart in their achievement. Businesses that shine because of the stellar contribution to the economy. With categories such as innovation, fastest growing and top performing business being the broad parameters, each of these MSMEs represent the best of small businesses in the country. To talk more on this, I welcome ETRISE editor Pran Bihongo Borpujari, who will tell us more on how we were able to zero in on some of the best MSMEs in the country. Welcome, Pran. So firstly, tell me, was it not difficult to narrow down on just a handful of MSMEs given the enormous talent pool in the country?
Yes, the scope was massive and the task very difficult. But we wanted to celebrate such enterprises who have created exemplary examples in their domain, often against all odds. The aim has been to recognize such MSMEs who have excelled in their space and taken stories of growth and success to the next level. Given the present environment, such stories need to be told to steer the future course of a sector which has been clamoring for survival, especially in the last few months.
So why don't you tell us more about the ETRISE Top MSMEs Ranking program and what have been some key takeaways from such an evaluation process?
To all our viewers at the outset, I would like to welcome you to this very special program, the inaugural ETRISE Top MSMEs Ranking. ETRISE is an initiative of the Economic Times Digital, a Times Internet product. ETRISE is dedicated to millions of entrepreneurs, small businesses, and millions more who harbor a dream of starting out. A destination for MSMEs and entrepreneurs. It covers all aspects of business and the policy guidelines that shape them up. ETRISE Top MSME Ranking is designed to celebrate, honor, and recognize MSMEs navigating difficult times, create growth and success. Before we proceed, I would want to talk about the genesis of the program. Ever since ETRISE was set up in 2015, one conversation that we always had internally was, which are the top MSMEs in the country? There was no list to refer, no databases available, and only some sketchy information what could obtain was on few innovations and some businesses that have grown fast over a given period of time. There are millions of small businesses in the country, and this surely could not be the yardstick to measure their phenomenal work. It was mid last year that we seriously started looking at this, and we decided to come up with a method to find and rank MSMEs that represent the best in the business. Several brainstorming sessions later, we did manage to come up with a method, which we believe is the best way to find these achievements. Together with our assessment partner, Care Ratings, a proprietary methodology puts a business through the most rigorous assessment procedure in the country. The result, we have top businesses in the country that represent categories like innovation, growth, and performance. This inaugural edition of ETRISE Top MSMEs Ranking was launched in December 2019. Over 8,000 MSMEs, of which about 66% of the entries were from manufacturing and 34% from services. We arrived at the final ranking after going through all the details and financials painstakingly, along with validation by the assessment partner and senior ET editors. I would at this moment like to thank all our partners and sponsors, Union Bank of India, MIDC, ASPIANDET, Board, and numerous MSME associations who have been with us in this incredible journey and for making this happen. What stands out in the end is that you may have never heard of many of these businesses. Unlike bigger businesses that have the potential to move markets and grab headlines, these companies have quietly gone on with their job. But make no mistake, each of these businesses are phenomenal, and some of the work they have done is pioneering. If big businesses in the country denote wealth, power, and influence, these small businesses are the soul and the beating heart of the real economy. Stay with us as we unveil the names that have made it to the list, along with some great panel discussions and keynote speeches. Over to you, Neha.
Thanks, Pran, for filling us in on the program and making us understand what makes the rankings so prestigious. Moving on, a look at the last few months shows the kind of steps taken by the government to handhold the MSME sector. Collateral-free MSME loans, change in definition of MSMEs, technology upgradation, and quicker clearance of SME dues have been among the concerted efforts to uplift a sector that has been hard hit over the last few months. Next up, we have someone who has been an integral part of India's policy making, and his experience and knowledge of working with entrepreneurs make him the perfect champion for small businesses in the country. He has been a key driver of the Make in India, Startup India, Incredible India, and God's Own Country initiatives that have positioned India and Kerala state as leading manufacturing and tourism destinations. Currently the CEO of National Institution for Transforming India or NITI Aayog, Mr. Amitabh Kant, is involved in shaping the discourse and rules to help Indian businesses scale. It is my great pleasure to now welcome Mr. Kant to deliver his keynote speech. Welcome, sir.
The micro, small and medium enterprises sector is a very important pillar of Indian economy as it contributes significantly to the growth of the economy with a huge network of around 63 million units leading to a generation of employment of about 11 crore, manufacturing of more than 6,000 products and a contribution of about 45% to manufacturing output and about 40% of exports directly and indirectly. Owing to this, MSME sector has emerged as an extremely vital sector of our economy. The MSME enterprises are important and significant as they provide employment opportunities at a reasonably lesser capital cost than large enterprises. They also contribute in the industrial development of rural and backward areas. Overall, this sector contributes hugely to the socio-economic development of the nation. However, despite being an important contributor to the economy, the sector continues to face certain critical constraints like credit availability, its cost, collateral requirements, etc. Infrastructure issues, ease of doing business, availability of appropriate technology also many times constrains their growth potential. Since the onset of COVID-19, the Indian MSME sector has been further hit extremely hard. Many MSMEs across sectors have seen extensive distress. The government has been highly proactive in coming up with various schemes to help the MSMEs uplift their business. The Prime Minister announced an incentive package of rupees 20 lakh crore as part of the Atmanirbhar Bharat Abhiyan. As part of the revival process, Finance Minister Nirmala Sitharaman announced revisions in the definition of micro, small and medium enterprises, while delivering a string of measures to help small businesses in India. She also announced measures to support the struggling MSMEs in the country, including collateral-free loans of up to rupees 3 lakh crore backed by a government guarantee, repayment of MSME dues within the next 45 days, amongst many others. MSMEs in India are taking benefit of these measures along with other strong steps. While the steps initiated by the government are being helpful for MSMEs, it is the prerogative of the entire ecosystem to come up with initiatives that empower the MSMEs in India in the long run. To celebrate the good work of the Indian MSMEs, the MSME sector requires a credible recognition platform to open opportunities for enterprises to leapfrog growth. ETRISE's creation of an all-inclusive platform that aims to celebrate the success of India's MSMEs is a great foot forward in this journey. The program will surely help MSMEs earn more trust and grow their businesses. I believe the ranking is recognition of MSMEs circumnavigating difficult times to celebrate growth and success. The effort by the Economic Times to celebrate enterprises with extremely good practices is highly commendable. The rigorous ranking process featuring will surely add a feather in the cap of the enterprises being ranked. It's a pleasure to see thousands of MSMEs across the country participate in the inaugural edition of ETRISE Top MSMEs Ranking from both manufacturing and services sector. Evaluating MSMEs on innovation, financial growth, and financial health for the ranking is a great concept, as through this, the MSMEs are not only gauged on their financial performance, but also on what innovation they are bringing to the country. The first category, identifying the top innovative MSMEs in the country, provides business an opportunity to showcase their business creativity and innovation and get recognized for it on a national platform. The second category, identifying the MSMEs which have fastest financial growth, is also significant. Businesses that have grown and scaled in size and earned revenue through its hard work should be recognized. This category should inspire businesses to stand apart by working hard enough to be on an exponential growth trajectory. While growing fast is imperative, sustaining that growth over years is even more important for businesses to achieve excellence. The third category that ranks businesses on all financial parameters like total revenue CAGR, profit after tax margin, return on per capita employment, among others, showcases the best of the MSME sector in India. These businesses have been able to generate wealth and value for its stakeholders. This category of ETRISE Top MSMEs Ranking would inspire businesses to tick all boxes on its way to achieve financial excellence. I look forward to finding out more about these companies. With this, I would like to congratulate all the MSMEs that have been ranked as part of this program in the three categories, namely India's top innovative MSMEs, India's fastest growing MSMEs, and India's top performing MSMEs categories. These enterprises certainly have a long way to go, and this achievement will prove to be a golden milestone in this journey. I wish ETRISE all the success in the upcoming edition of this program and hope it keeps on empowering the MSMEs and give them a unique opportunity to excel. Thank you very much, ladies and gentlemen.
Lack of adequate funding is the most common issue plaguing the growth of MSMEs in the country. And COVID has only aggravated the financial nightmares aplenty for small businesses. How can funding be made more accessible to ease their woes? And how can financial institutions lend a helping hand to offer relief to the MSME sector and enable them to tide through the crisis? To discuss more on this and understand the way forward, we have a panel discussion on the topic Funding for MSMEs, Supporting the Flow of Credit. In the panel, we have A. Vinod Kumar, Chief General Manager, Union Bank of India. Union Bank is a leading banking solution provider for SMEs and has various tailor-made products for MSMEs. Also in the panel is S. Viswanatha Prasad, Managing Director, Caspian Debt. Caspian Debt has been in the business of supporting underserved, professionally managed entrepreneurial ventures and social enterprises scale for growth and impact. Over to you, Pran, to take the discussion forward.
Uh, Access to finance has always been a long-standing issue. And to figure out where we stand, we have a panel members from both sides of the lending spectrum. Representing one of the largest government-owned banks of India, we have Mr. A.K. Vinod, Chief General Manager, Union Bank of India. And representing the new age lending sector, we have S. Viswanatha Prasad, Managing Director, Caspian. Welcome you both and thank you for speaking to us.
Thank you. Thanks for having me.
Mr. Vinod, if we can come to you first, what is your assessment of the current state of MSMEs in the country?
Well, the current state of MSMEs are certainly bad, just like the whole ecosystem that we can understand. Basically, most of the MSMEs are going through two issues. One is a liquidity issue, and then and also the solvency problems. Both the regulator, the owner, as far as public sector banks are concerned, and the banks themselves, we are all working out on various initiatives and solutions that can help them to tide over this. Having said that, there are some MSMEs which are doing well because they are in the sectors which are doing well. Say, for instance, some healthcare sectors, so they are doing well. Even certain MSME borrowers who are in textile and who have their infrastructure, who have now got into making PPEs with good orders from government. So those are doing well. But then, in general, MSMEs are certainly going through an unprecedented problematic situation, and all of us, the government, the regulator, and the bankers, they're all working towards helping them out, because helping them out is helping us also. So we are doing it. In fact, the government has initiated the Atmanirbhar package, and even before that, our bank, Union Bank, has started introduce some products to help them to solve their liquidity issues. So the Atmanirbhar package has come in handy. In fact, the recent one is the guaranteed emergency credit limit that we made a good beginning to start with. And as I speak, on a day-to-day basis, we are monitoring the performance of all the branch units, and we are ensuring that it reaches to the last mile. So I hope, because like anybody, we are not having a clear visibility even now for the entire situation or the entire ecosystem. So for MSMEs also. So I only hope, as collectively we are hoping that the things will solve in the coming days.
Right. Mr. Prasad, the same question to you. What do you think is
Mr. Vinodji said, of course, it's a difficult situation. I mean, everybody is going through stress because of what is, the impact on the economy, and so on. MSMEs are not obviously, far away from that impact. But from our standpoint, we see a slightly different impact depending upon the size. So we see that the micro enterprises are able to probably bounce back faster. We are seeing, green shoots faster in them because at least the early signs, what we are seeing, they are more working in the non-discretionary spend areas. So they are, coming back faster. The smaller ones and the medium ones, so it's kind of inversely proportional to their size. At least as of today, what we are seeing. So amongst the larger ones that are dependent on, that are more integrated to the mainstream economy, they are having all the cash flow and solvency issues that Mr. Vinod mentioned. but we see the micro enterprises coming back faster. But it is a very tough time. I mean the issue of cash flow and solvency, how quickly whatever the pent up demand is there that can come back, one has to see. But I am hopeful. When if someone would have asked me in March or April as to how quickly the bounce back will happen, I am, at least from early signs, I am seeing the bounce back signs are I would say sooner than what we had anticipated. So so there's some green shoots that are happening that gives us hope.
Right. If I can come to you, Prasad talked about, inversely proportional to the size of the MSME. Uh, is that how you see things as well? And also, the announcement that the FM made on May 13 was the bilateral free loan. How do you see the progression of that scheme? And is it better with micro enterprises? Is it a sector actually micro enterprises that banks are lending to?
Certainly, micro enterprises has been a focus area ever since the Mudra schemes were also announced, and public sector banks have been catering to the micro enterprises. Now, as far as the micro enterprises is concerned, micro enterprises have been served, and that's one has been always the focus area for public sector banks. And with the announcement of the Mudra scheme, we have a set target, and all the banks are putting their machineries in place to service the micro enterprises. And as far as the package of the guaranteed emergency credit limit, which was announced by FM, right from the day zero, the banks have jumped into action. And if you could see the Union Bank figures, we were leading from the front to start with. And all the eligible borrowers, we have seen to that, our entire infrastructure was in place to ensure that all the eligible borrowers, the accounts were opened and the amounts were sanctioned. And even now, we have almost crossed 94% in terms of the disbursement is concerned, the sanctioned loans. So I don't really see a problem or any delay occurring here, because we bankers saw this as an opportunity for business as well, because what else was happening during the lockdown? At least this is one thing which we are able to connect with our existing borrowers, and we were offering something which was guaranteed by the government. So all the branches, we were focusing on achieving the set timeline, so that because we have to do that before a certain time, so that we can claim the guarantee. So we become eligible for the guarantee. So we have already reached a 94% as per the current figures. And of course, during the time, we have seen many of them opting out also. It's not that all the eligible people were wanting to take the because ultimately they were borrowing. So there were many of them who have opted out. They didn't want to and you must have seen the moratorium also, that many have opted out, who have a structural strength to sustain, and those are the people who have opted out. And micro level, at some point, you find that it is not very remunerative for them. In the sense, if you take the charges involved, the documentation in certain states, so you find that it's more than what they would receive. So because the 20% of the outstanding would be too smallest an amount to help. So there, of course, you wouldn't see it's so helpful. 20% of an amount outstanding for a micro enterprises. And plus, if you would like to, you have to incur the stamp duty and all those prevalent in the various states. So there, it has not worked. But in majority of the cases, this is certainly a win-win situation for the borrower as well as for us, because being guaranteed, it gives a good comfort.
Right. Mr. Prasad, if I can say on the same question, what is the kind of feedback that you are getting on the collateral-free loans?
Yeah, very positive, because there are these two types of micro enterprises. One, some of them who do not have not seen their business come back, so they do not want to borrow, so they have opted out. But there are some who require this money, and if you see the aim of the scheme is that it is not that the banking system does not have the liquidity to lend. The issue was not liquidity, the issue was risk. So it was a very well timed and thought out scheme. And the 100% guarantee without guarantee fee, like Mr. Vinod said, it's and the banks and the NBFCs have the network to respond quickly, and that is seen as a business opportunity also by the financial institutions, whether bank or NBFC. So I think it has been a good kind of an apt thing for covering risk, because liquidity was not an issue. Now, of course, for some the 20% is very small, but when the scheme was quickly announced, and the speed was very important. It had to be announced and rolled out immediately. So I think. Also, when you provide 100% guarantee, also from the government side, you have to see as to what proportion you want to give. So the government wants us as institutions to also have 80% exposure to these institutions, so that they then get the comfort of guaranteeing, their 20%. Perhaps it could have been higher, but other terms and conditions are quite clear. So I think it is even the tenor is quite acceptable. So I think it is a very well thought out scheme. Perhaps the 20% can be enhanced, but maybe the government will see the first round of disbursement and see the data, before some of these modifications. I'm sure banks and NBFCs may propose, because we are also doing this, in the first time and in quick time. So we will also start getting feedback, and maybe we can provide that feedback to the government.
Right. Mr. Vinod, if I come to you, if you look at the figures, however, there is a disparity between the amount which was sanctioned and which has been finally disbursed. It's almost half. And there has been MSMEs who are complaining that, banks have been slow to respond. How do you see that? And why is this disparity between sanction and disbursement?
Yeah, the disparity between sanction and disbursement is that number one, there are borrowers who are not availing the sanction at one go. They're saying that okay, we will take right now a certain amount, and then we'll come back to you when it is required. So this is one area where you have a gap. Second area is that I told you, like, we have sanctioned a certain amount, but there are still opt-outs after that, post-sanctioning. So this is also contributing to an area of the disparity between sanction and disbursement. And largely what the complaints that we are receiving during this stage are the ones who are in the borderline case. Somehow they got into SMA 2, which would make them ineligible. So these are the general complaints. But we, from our side, I don't know on what data you are speaking, but our experience has been that the complaints are not from those who have been sanctioned and not getting disbursed. On the contrary, we have put up a special cells at our regional offices for them to, their singular work is to contact them and ensuring that this is delivered. Once sanctioned, it is delivered. Because ultimately for us also, our lending would finally happen if it is delivered. So I have not seen, come across any major complaints on, the ones who have been sanctioned. They are complaining that they have just not been disbursed. If the account has been opened and not sanctioned, there's a reason for them to complain. But many complaints are coming on because of, unfortunately, they are into SMA 2 and they become eligible for the whole.
If they're in, like you said, in the borderline case of between SMA 1 and SMA 2, what do you do in that case? Do you take it up on a case-to-case basis? Do you review it? What?
No, because this is a structured scheme from the government, from NCGTC. So we have no scope for any change, making any change. But having said that, we are individually examining those accounts, and if they are worthy of this thing, and if we can come with some option for them, we are doing that. As I told you, we already have our own scheme of 10% of emergency line of credit. So, based on the discretion at the field, whatever our policy would allow to help them, we are doing that. But the scheme, we can't do anything about it because it's a very structured scheme from the NCGTC.
Right. Mr. Prasad, what is the role lenders like Caspian is now playing? Scenario like this, you talked about the micro enterprises as well. What is the kind of role that you guys are playing now?
Yeah, as you know, we are a specialized, NBFC. We have, certain, so we operate in the niche area of, we lend to micro enterprises through intermediaries, other MFIs, and then we lend to the high impact SMEs, we call them, directly. These are, like I said in the beginning, these are some of the larger sized, within the MSME. These would be some among the larger ones, which are in some of these specialized sectors, sustainable agri, clean energy, health, education, etc., and who have had some external, investment as well through venture capital or private equity. So these are entrepreneur-led, high-growth enterprises, and these enterprises or entrepreneurs are usually first generation who cannot go to a formal financial institution like a bank with collateral, and they may be prioritizing growth over profitability, which then really they are outside the purview of banks. So banks require profitability and they require collateral. So we operate in this niche area where we provide collateral-free loans, both term loan and working capital, to the larger MSMEs in certain high-impact sectors, as we call them. So for us today, the impact for us is on twofold. So there are certain enterprises who have been positively impacted by the crisis, like as Mr. Vinod mentioned in the beginning. So whether you are in sustainable agri or in education, where there's a lot of movement to online. So if you're providing content, if you are able to pivot to a more online or other forms of either sales or service. So we have seen some of our partners actually grow in their business. So we have to come and provide them the additional debt that is required for that growth. Well, at the same time, there are others who are severely impacted because they are working with other, enterprises where the factories are shut, etc. So we have, like any portfolio, we have these two extremes. But we are even outside the emergency credit line scheme. So the enterprises that are growing and have seen this as an opportunity to pivot their business, there also we see an opportunity for us to work with them and lend to them. But of course, it is on a case-to-case basis. Risk assessment has to be different, pre-COVID, post-COVID, whatever framework we had, all that we have to review and reassess. But in spite of that, we do see this. This is how the portfolio is getting impacted.
Right. So Vinod, if I come to you, what has been the impact of this pandemic on lending, especially lending to MSMEs? How has it changed for you guys?
Of course, this is has challenged the entire the credit decision-making system, which normally we would have. The challenge is to find a good borrower in this kind of a situation, and most of the borrowers, when they are grappling with this situation, when the challenges on the supply side, challenges on the demand side for them, challenges on the operational sides with the labor moving out, with the cost of production going up, all those things, the borrowers are certainly finding it very difficult. Their cash flows are under very tight situation. So obviously, it is not an ideal situation for a lender to find a to cherry pick and then do it. But having said that, we are also flexible. And we are also figuring out, in what way we can give them concessions, and in what way we can reassess their operating cycle. In what way we can come out with certain products which can help them for an immediate solution. So these are the challenges from our side. Basically to find a good borrower. But then, as I told you, this is an unprecedented time with initiatives from the government and the support from the government of products like the guaranteed credit limit. We are immediately jumping at it and trying to use that to our advantage, not only help the borrowers but also to improve our credit line. In fact, if you look at, we could grow for about 4,000 crores during this time, year on year, just on doing this to our existing borrowers. Because this is the time we should come out with some initiatives to help them. And if we don't do that, then it is again going to hit us, because it's going to turn bad, and then we will be tapping the NPS post-August. So this is what we can do to do whatever to tweak the operating cycle, to tweak the working capital assessment, and providing concessions wherever possible. So and do that. And even during this time, we are finding out good borrowers who have core structural strength and who can sustain through this. So we have teams who are able to source such proposals as well.
Right. Mr. Prasad, similarly, if I can ask you, what has been the impact of the pandemic on lending, especially when it comes to obviously MSMEs?
Yeah. So one is, of course, the existing clients we know. We have a relationship with them. So there's one way that you deal with them. But when we want to increase our origination and go to new clients, it poses a few new additional issues that have come up. One is that we are not able to travel, we are not able to go and inspect their premises, we are not able to meet the team, etc. So we had to quickly pivot to digital. And like I said, since our assessment involves a lot of financial assessment that can be done in one's desk, but also involves a lot of subjective calls on the business model, cash flows, etc. So we had to quickly pivot to how to do that without visiting the customer premises or meeting the entrepreneur a few times. So we had to move a lot of that digitally. The second is that, like I said, how do you assess the impact of data is not going to be perfect. We're not going to have perfect information post-COVID to make a credit decision. So within what we have, how can we tweak our credit models? We have done that, and we have found some surprising results. Like I said, a positive impact. Businesses that have had positive impact, we have gone out and sort them out, looking at more business. So I would say, and also we have very quickly introduced a new product, which is what we call a quick handshake loan, which we can do depending upon how quickly we can turn around the case. So using a full digital assessment, we've been able to roll out this product, which is what we call a quick loan, which is up to 1 crore that the assessment is done completely digitally and disbursed within 3 weeks.
Right. So Vinod, if I can come to you, Mr. Prasad talked about how he had his lending criteria. How how was it at your end at the bank? Probably what worked before does not work now. A sector that might have been lucrative before uh, may not necessarily be lucrative now, or it might be, a specific geographic location. We see, districts, cities coming in and out of lockdown. What does it do to your credit assessment models?
See, as you said, uh, pre-March and post-March, there's a certainly nobody is having a clear visibility. Even now, what we are working is about the best of our gut feel. And as far as the credit assessment models, the risk models are all being challenged. In fact, all of them have a certain all limitations to assess unexpected losses, and external rating agencies are downgrading just based on the normal situation, which is not a correct way of doing it. There is a certain new normal which we need to accept in the current situation. So you have pointed out some geographical listing, because we don't find any geographies which are giving us promising, or which are not. Because as we are speaking, almost all geographies are equally affected by the current situation. There are sectors, of course, which are in deep trouble, like hospitality and, for obvious reasons, tourism, and are all in deep trouble. So there, of course, we can't go and expose ourselves. We have to look at the green shoots available during this time. We have to look at some promising sectors also, like I mentioned about healthcare. We find who are thriving actually, whether it's pharmaceuticals who are manufacturing, PPEs, masks. There are some textile units who have innovatively used their infrastructure in place to cater to large orders for PPEs and masks, and which are consumed a lot now. So those are the areas. Some places where the supply side and the demand side have started improving. We are finding some green shoots there. So as far as the risk assessment is concerned, we need to move ahead, accepting certain things, accepting a new normal, because the traditional risk management models have not or could not capture this situation, and they all are having limitations of capturing these unexpected losses, and this confidence level was certainly are very far away from what is normally taken. So yes, of course, we need to gauge risk better, but accepting certain new normals and not venturing into areas which we understand are in deep trouble, and they need some special interventions and packages by the government and the industry level itself. It needs to be taken care. But having said that, after the unlock, there are businesses which are coming back. So those are the areas which we can venture in the current circumstances.
Right. Mr. Prasad, you did talk about it, my earlier question. What has happened to your credit assessment model? And can you actually, do everything online?
See, I think what has surprised us, I think, when I say us, I mean as a society, is how many of the things we thought we cannot do online, we are able to do online. Okay, whether it is working from home, whether it is studying from home, etc. So I think there has been a general surprise about how many things we've been able to achieve. So yes, I think a lot of the 10 years ago, was this possible be able to do this digitally? No. I think today we have the technology and the models where we can do we can do a lot of offline digital analysis and desk work before we make a credit decision. Of course, when and no credit model or credit system can take into account a COVID situation, and if your credit model has to withstand that, we can't do any lending. I mean, you can't assess, you can't this is such an event that no model would rightly has predicted it. And going forward, also, no model should incorporate this as a hurdle to pass for credit. In that case, we will not be able to do any lending. But having said that, we have developed a model that assesses the impact of the pandemic. So, just to give you a couple of examples or parameters, see, there are industry level positive and negative sectors. Hospitality we mentioned is negative. There are certain businesses that are catering to a PPE or that are able to pivot to online. Those are positives. Negatives are, of course, hospitality, travel, tourism, etc. There is also the level of strength of an enterprise is also there. That level of capitalization, level of cash flow, the type of counterparties that they deal with, that also makes a big difference whether you are able to sustain a shock like this. So I think, and another big factor that the new model has taken into account also we see is how much of the risk is there that an enterprise has of its supply chains and distribution chains. So earlier we thought a locally operating company with local resources, local staff, and local market was not ambitious and was catering to a very low, small geography. But today, if that geography happens to be in a green zone, they are virtually not affected because they have raw material, they have labor, and they have their market. Whereas, businesses that had supply chains that were much longer or international, they are affected quite a bit. So I think some of these interesting, nuances I think have come out on a risk assessment. So we've tried to look at that because, like I said earlier, some of these assessments also shows the opportunities that are there. Right, so we were not going and looking for local businesses with local supply chains and local markets. But today, if you describe that as a business and is in a green zone, they are doing roaring business. So I think some of those opportunities also I think we are seeing.
My last question to you would be, beyond the measures announced by the government, what more can the banking industry do to help the MSME sector?
Of course, the government packages have been very supportive for the banking industry. And as I mentioned earlier, even before these packages came, at least I can talk about my bank, that we had, looked up to this situation and then come out with certain schemes for them, starting from the, giving them an additional 10% of emergency line of credit, and reworking on the working capital assessment, reducing the margins, giving concessions. So these were the things which were beyond the packages that we received. The guaranteed scheme, of course, gave us more comfort in terms of not only as the guarantee of the scheme, but also the zero risk weight it carried. And the other one which we just discussed about the digital. Now we have accelerated our digital initiatives. We are trying to do our best to come out with the straight-through processing, and we are accelerating on that and trying to improve digital delivery of loans. And these are things which we are working on. And as rightly pointed out, that this is also coming out. Any adversities are also throwing out opportunities in the digital world. We are finding new areas of doing business, and beyond the initiatives of the government and regulator, this is what we would like to do by reworking on their requirements and being a bit more liberal, and not insisting on certain things. In terms of if we can give them relaxation of deadlines to meet, if we can have relaxations on accepting certain risks, and then going ahead and helping them. These are the things which we are doing.
Right. Mr. Prasad, the same last question to you. What is it that you guys can probably do more?
So, I mean, I would answer this in two ways. One is what is it that we as an industry can do? See, I think a lot of the discussion happens on the supply side. You know, how much credit flow can go into the MSME sector. But I think we should also see the demand side. I think, see, once as an industry, MSMEs are able to increase the credit quality of them as a group, automatically credit will flow. And why? How to improve credit quality is you need capital and you need cash flow. So from the demand side, if as an industry we can work to find to increase the flow of capital, equity capital, not just credit, that will give bankers a lot of comfort. And secondly, I think while some efforts were made by the government, at least to clear their dues, about 5 trillion worth of state government and central government payments to MSMEs are pending as of March. I don't know as of today how much of that has been cleared, but 5 trillion rupees was due just between state and central governments. Now, I am assuming that it will be a multiple of that with large private sector enterprises, which the MSMEs are owed. So if you combine these two, so get them capital, number one, and number two, find ways to give them the cash flow that is due to them. So today there is no penalty or cost for a large enterprise or a buyer to delay payment. We have some rules, regulations, etc. But practically speaking, a large enterprise's credit rating will not get impacted because they are delaying payments to MSMEs. So all of this will improve their cash flow. It will improve their credit performance to banks. Then automatically, like how we went after microfinance companies, because their underlying credit quality is so good, substantial increase in credit will happen from the demand side. Once your credit quality improves, you look at housing loans, you look at LAP, where all the credit performance is good, automatically money will flow. So I think also, apart from looking at supply side, we should also look at demand side as to how to strengthen the credit quality of MSMEs. That's what I would say. As an industry, we should try to do that.
Wonderful. Great. Thank you so much, Mr. Vinod. Thank you so much, Mr. Prasad. These are challenging times for lenders, but like I think both of you have said, it's also thrown out interesting opportunities. Thank you for talking to us. Thank you for being a part of this discussion.
The first category that we will announce today is on India's top innovative MSMEs. Innovation can be of different shape, size, or form, and ETRISE Top MSMEs Ranking follows the OECD's Oslo Manual, customized with certain changes to meet the aim of the program. For us, innovation could be classified into 4 types: product, process, marketing, and organizational innovation. To judge innovation for the ETRISE Top MSME program, we have used much of the framework as outlined by OECD and blended in some changes in the criteria. For us, business innovation is a new or improved product or business process that differs significantly from the firm's previous products or business processes, one that has been introduced on the market or brought into use by the firm. The definition requires an innovation to be a commercial, financial, or strategic success at the time of measurement. The definition of an innovation does require it to have a positive value for society or a positive benefit for the firm. Routine changes or updates do not, by themselves, represent product innovations. For example, software updates and seasonal changes in clothing fashions is not innovation. Similarly, simple capital replacement or extension is not an innovation. Product introductions that only involve minor aesthetic changes, such as a change in color or a minor change in shape, do not meet the requirement for a significant difference and hence are not product innovations. The outputs of creative and professional service firms, such as reports for clients, books, or films, are not by default an innovation for the firms that develop them. We received thousands of entries spanning through the diverse domains of space to agriculture. All the entries were judged by the ETRISE editorial team on parameters such as the significant difference of the entry, the novelty of the difference, which is, can it be objectively measured in terms of energy efficiency, speed, material strength, user satisfaction, among others. Even criteria such as ability to create value and implementation and putting the innovation to actual use were keenly considered. What you see on your screen is not a ranking, but the 20 innovations that made it to the list this year, sorted in an alphabetical order. Let us now take things a step further and hear it from some of the companies and innovators in the list, in no particular order. We have 3 such featured innovations, and again I would like to remind you that these are not based on any ranking. First up, let us hear from Cellzyn Biotech India, which developed an engineered enzyme that could be used as a green biocatalyst for commercial manufacturing of antibiotics. Established in 2013, the company offers advanced technologies to develop novel recombinant enzymes for bioprocess and diagnostics. We have with us Rajkumar Rajgopal, the Managing Director of Cellzyn Biotech.
So being ranked on the ETRISE Top MSME Ranking in the innovation category is a great honor for Cellzyn Biotech, and I wish to thank the ETRISE, also the team members, the jury members, and as well as Biotech for all the support this year to make this possible. And I wish to thank the incredible amount of work which has been rendered by Team Cellzyn to make these innovations possible in all these years. Thank you.
Next, we have Ostrich Mobility Instruments, which has taken the concept of mobility, customization, safety, and independence to a whole new level. The company indigenously develops wheelchairs and mobility scooters, especially suited for Indian road conditions. Let us hear from Venu Krishnan, the Managing Director of Ostrich Mobility.
Thank you so much for selecting Ostrich Mobility as part of ETRISE, Top MSME Ranking. And I believe this ranking will inspire Ostrich as an organization, Ostrich as a family. And this is an inspiration for us to perform better than what we have been used. And I believe this recognition is part of the commitments which has been delivered by Ostrich to the society today. We will continue to improve ourselves and ensure that we will continue to inspire the team. And I am sure there will be many MSMEs will be getting into this ranking in the future. I'm sure if we can be an inspiration to them, we'll be more than happy. Thank you so much once again.
Finally, we have Bilatrix Aerospace, a research and development company developing orbital launch vehicles and electric propulsion systems for satellites. In fact, its first product is the microwave plasma thruster, a patented thruster that uses water as propellant to power a satellite in space. Now that's interesting. Let's hear from the young co-founders themselves, Rohan Ganapati and Yashas Karna, who founded the company in their early 20s.
This is Rohan, CEO of Bilatrix Aerospace, an in-space propulsion systems company based out of Indian Institute of Science, Bangalore. I, on behalf of my entire team, feel privileged and honored to be selected as ETRISE Top MSME Rankings 2020 in the field of innovation. As people say, space has no boundaries, and we at Bilatrix also believe space exploration is the next big step. And I and my team sincerely thank the jury of ETRISE for giving us this great honor. Sky is the limit. Thank you so much.
After those very interesting innovations, it is time to move to something exciting. As relationships between nations get rewritten, economic activity around the globe is also witnessing considerable churn. An anti-Chinese sentiment is leading many nations to question their own reliance on the East Asian country. As manufacturers look to move out of China and scout for alternate production hubs, India can position itself as the next best choice. But this will be easier said than done, and being a manufacturing powerhouse will need a complete overhaul of systems and policies for India. Plenty of challenges exist, and nations like Vietnam and Bangladesh can prove to be serious competition. In such a scenario, how can India ramp up its manufacturing ecosystem, and what needs to be done to become a prominent player? To discuss more on this, we have a panel on Can India Replace China as the World's Factory? To talk more on this, we have Rene van Berkel, UNIDO Representative, Regional Office, India. The United Nations Industrial Development Organization, or UNIDO, focuses on sustainable industrial development and inclusive economic growth and has long working relations with MSMEs in the country. Next, we have Rajiv Chawla, Chairman IMSME of India and Jairaj Group of Industries. Mr. Chawla represents an industry chamber of MSMEs in Faridabad and is also the founder of an auto components company. Nitin Kunkoliankar, President MAIT, also joins the panel. MAIT is the apex body representing India's IT hardware sector. Lastly, we have Rajiv Singh, Partner and Leader Automotive, Deloitte, India. Mr. Singh has over 22 years of experience across both industry and consulting, and his primary focus has been automotive and manufacturing. Over to you, Pran, to take this forward.
Thank you, Neha. And you're absolutely right in pointing out the importance of manufacturing in India. The topic of manufacturing in India has seen great discussion over the last couple of months as talks of India becoming the alternate to China gather steam. To discuss how India can become a manufacturing powerhouse, we have with us today a distinguished panel, and it's my pleasure to welcome them. First up, we have Rene van Berkel, UNIDO Representative, Regional Office, India. Rajiv Chawla, Chairman, IMSME of India and Jairaj Group of Industries. Nitin Kunkoliankar, President, MAIT. And Rajiv Singh, Partner and Leader Automotive, Deloitte, India. Thank you all for joining us. Great. Rene, let me come to you first. You have the international perspective as well, and you have been closely associated with Indian manufacturing space for some time now. How would you characterize this space?
Thank you very much. And yes, indeed, I've been associated with India and particularly with the manufacturing sector from a perspective of facilitating inclusive and sustainable industrial development. We see the manufacturing sector, I think two words come to mind. One is dynamic and the other one is very diverse. So dynamic is that there has been quite a good ability to respond to different developments and to be entrepreneurial in that sense. And that is also now helping, and we see that also in the current COVID situation, that new businesses are starting to repurpose. They are starting to use the 3D printing machines to produce ventilator parts, or they're starting to manufacture PPEs as an example. So the dynamism is very much there. I think on the other hand, it's also very diverse. So it's very difficult to speak about manufacturing in India as a one entity. We see from of course one feature is of course a highly domination by MSME sector, and then MSMEs often a bit looked upon negatively or frowned upon, which I don't think is always right. It might be in some cases right, but there's this diversity of even in the MSME segment of businesses which are really very old-fashioned technology, old technology, but also very high-end technology startups. And then the MSME segment is so intricately linked to also the major export earners or the major OEMs of in the automotive sector or in the electronic sector, or you go to chemical sector where a lot of the initial manufacturing of basic chemicals is done by small and medium-sized enterprises. So I think it's dynamic, diverse. It doesn't fit in one box. It's also quite, I would say, entrepreneurial, and so quite a dispersed, a divergent picture, I would say, as a first impression.
Right. Mr. Kulkarni, what is your views on Indian manufacturing?
Say, as on today, we are certainly looking at the China versus rest of the world as an opportunity. India has to cover up for the lost period. Say today China has almost 16 trillion economy, contributing almost 40% of the contribution comes from manufacturing sector in their GDP. In India, out of 2.4 trillion economy, we get hardly 16%. But if you really look at the size in terms of China, we are nothing. We need to do a lot. In fact, India focused more on service in past 2 decades. Probably we failed to understand the importance of making manufacturing grow in this country. We thought India could lead the world in an easy way through service development. Manufacturing has a very high multiplier. A higher share of manufacturing will also add to the growth of service sector. I think we didn't catch up on this agenda maybe somewhere in 90 or by 2000, year 2000, we didn't catch up with this agenda. And that is where we did mistakes. And that's exactly the time where China started becoming a manufacturing superpower. So we need to do some quick exercise. And many times I talked about the federal structure that exists in the country. Alone creating policies at central level doesn't work. Even in central government, if you see, each administrative ministry drives manufacturing in their own ways. You look at renewable power sector, they look at the different aspects of manufacturing. You look at automotive sector, it has a very different segment of electronics, but again the outlook is different. Electronics and IT is being dealt by Ministry of Electronics. Railways have a different approach towards making manufacturing happen for their products. But there is no integrated approach that is happening, manufacturing as a whole, electronics as a whole. Even if you are talking about power segment, and today in solar and other aspects, there's a lot of electronics happening. We need to understand the convergence of technology, and probably we need to start considering the demand. Today, if you work on demand aggregation alone, looking at Indian market is not enough. We need to also look at the global markets. You need to be export oriented. You will be competitive in India only when you are able to be competitive in export markets. That's where our focus from import substitution has to go towards participating in the global value chains. So I think we need to correct our legacy, take states on board, take the same central government agencies on board together on a common agenda of manufacturing. At times, DPIT or Department of Promotion for Industrial Growth, they talk about one structure of manufacturing, then they say if it is electronic manufacturing, you go to IT department. I mean, everyone tries to compartmentalize. And I think that's not the right issue and not right way where manufacturing can grow. So we need a entire government of India should have one manufacturing mission, and all the states should come together on board. That would drive a change in manufacturing sector in this country. Otherwise, the states have their own policies, their own vision, their own compulsions. There is no ease of doing business in the states. In most of the states, there are issues. There is a difficulty in getting good land, quick power, water, roads, connectivity. Our ports are having severe issues. They are not equipped to handle India to be a manufacturing superpower. Let's be very frank. If you want to grow through an exports mode, India is just not geared up. You look at the quality of ports, it's one of the best. Even if we want to connect our neighborhood countries through a good railway service, we are very weak. We haven't bothered about it for so long. So India has to look at the holistic. We have to have a holistic approach and look at a complete value chain of manufacturing, take state, center on board together, and industry would certainly grow. That's what I would like to say.
Richard, let me come to you now. What is your view of manufacturing in India? And auto is a bright spot. What is it that you guys have done right till now?
Okay, manufacturing in India, especially for the MSMEs, is the future. When I say it is the future, I think it is the future of India's economy. And a lot of after agriculture, manufacturing is the sector that is really going to provide employment to to people in India. And manufacturing MSMEs in India have been contributing a very large share in terms of the total output that is from the manufacturing sector. About 45% of that comes from the MSME sector. And a very large part of exports are also from the MSME sector. So directly and indirectly, even today, the manufacturing MSMEs have been providing. They are, after agriculture, they are the second largest employment provider. So, any boost to this sector or any development in this sector would impact very positively the entire economy of the nation. Manufacturing is very, very critical, and it's not just about make in India movement, but today it's about self-reliant India. And if we are talking about making a self-reliant India, and an India that is globally seen, where we say local is now global, then manufacturing in the Indian sector, as MSME sector, has to become the government's first agenda for times to come. And as you mentioned about the auto sector, how this wonderful transition came. And I have no hesitation in saying that we learned big time with one small company entering into India, and that is Suzuki. And it came as Maruti Suzuki, a joint venture. And that one company created the entire work culture. Till then, India, and I remember I had just entered the manufacturing sector those days, and the new quality norms, the new quality systems, right from the packaging to delivery, the QCT, the quality cost delivery norms, etc. All this came so much as surprise. Today, that with Suzuki has virtually come in a work culture. All the terminologies that manufacturing sector today uses, the 5F, the Kaizen, the Toyota line of the systems of manufacturing, everything comes from Japan with that one company. So I think it's not about just the one sector, it's about the entire manufacturing culture. And Suzuki brought that to India, and we owe it to that.
Mr. Singh, you are associated with the auto sector. Auto sector is largely considered to be one of the strong points of Indian manufacturing. Is that assumption true, or do you think we have deficiencies in that sector as well?
So yeah, I'm just going to add to a few points that we heard. See, automotive, you're right. If you look at various sectors in the country, automotive is one of those sectors where manufacturing has really done better off. Maybe apart from automotive, you look at some of the other sectors like textile, we have done slightly better off. We may have done slightly better off when it came to maybe consumer durables and the FMCG sector. But some of the sectors where we really missed out big time, I would say, is electronics as a sector, where we really could not establish a very large value chain within the country. Another thing would be to do with high-tech companies. We could not really attract big investments when it came to high-tech. And very importantly, the backbone of most of the manufacturing comes from capital goods. So that's another sector that I think we missed out. So just like Rene said, I think that as a country, we see a pretty diverse set of manufacturing value chains in the country. Some sectors have done better off, some sectors have not done all that well. But one of the things that I would like to highlight is we had created a vision to say that let manufacturing grow and contribute to say 25% of our GDP. About 5 years back, we said that. Manufacturing was at 16, 17 percentage points of GDP, say about 5 years back. And we still hover around the same number. It may have just gone up by maybe 0.5 or 1%, but not a significant increase in that. And that's where I just wanted to bring about a point that let's learn and realize that when some of the countries have become very big in manufacturing, there is something that they have done very differently. For example, if I say manufacturing and China, the one word that comes to the mind of everyone is economies of scale. So if you say manufacturing in China, the one word that people think of is economies of scale. If you think of manufacturing in Japan, because Japan is also very, very strong in manufacturing, the one word that people think of when they think of manufacturing and Japan is quality. Because they think, okay, if you do manufacturing in Japan, you'll get high quality products. Let's look at another example. Think of manufacturing in Germany, for example. So the moment you say manufacturing in Germany, the one word that people will come back and say is engineering, because that's what manufacturing in Japan is known for. In Germany is known for. But when you say manufacturing in India, okay, there is no such kind of, there is nothing that really represents. And I've heard all kinds of answers. Rene may not be able to relate to this, is Jugaad. Yes. Okay, now that is what I think we need to think about when you think of manufacturing in India. What is it that we can build a DNA around? And when people say that, okay, let me try and replicate a China model into India, I think that let's rethink, is that the right strategy? Do we want to just be a Me Too in the globe and say that let me also build some factories which are representing economies of scale in India? And is that really possible? Because do we have the right ecosystem? Nitin, of course, spoke about a lot in terms of the ecosystem, in terms of ease of doing business, infrastructure, ports and other things, and so on and so forth. So do we want to be really a Me Too to China to say that, okay, what China did, they are known for economies of scale, that's what we will do in India? Or do we want to have our own DNA on manufacturing in India, just like Japan, China, Germany, US, and other countries have? Can we have our own DNA? And that's what I thought could be a point to think about, maybe frugal manufacturing. Let's not think of large volumes to be produced from India, but let's think of how do we do manufacturing which is highly personalized, which means that we don't produce large volumes. We produce comparatively lower volumes, but we do highly personalized products or customized products, which means batch sizes are smaller, and still we remain frugal. So I think that's an important thing that we need to collectively find an answer as to what is the DNA of or the Indian manufacturing that we would like to represent. Otherwise, the fear I have is that we are all going in different directions, trying to replicate the models which are already existing in manufacturing in different parts of the globe.
Renee, let me come to you. Let me take this further. What Mr. Singh said right now. Is Jugaad going to be the right approach to manufacturing, or at the most we can, look at it as something which is a little temporary? And then, what should we produce? I mean, if China is the factory of the world, should we just go on producing everything, or should we like compartmentalize and say this is what we'll produce, this is what we'll not produce, this is what we'll be good at? What are your views?
Yes, quite a number of questions. I think I would like to reflect on Nitin's comments that I think much more can be done in India with manufacturing, and there is much more potential with a strong focus on manufacturing. And that brings me back to the question to your answer to your question, Pran, that what we see as a bit missing in India is this sort of manufacturing competencies. So a fact that many businesses have started manufacturing from a trading background, they have not established strong manufacturing skills or manufacturing systems. They might be good at welding or painting or something else, but they cannot immediately see a manufacturing system. And that is then reflected in the Jugaad kind of reference or so, but we cannot do digitization of the Jugaad manufacturing. Then we get bogged down completely. So we need to invest, and that's also, UNIDO's work is very much on that, to build up manufacturing competencies and put a value on that. And the irony is actually that some of the advanced manufacturing technologies like Industry 4.0 are part enabled by the IT services which India is providing. So India is providing these to helping to develop this, but it's going to go into the US or Japan or Germany for that argument's sake. So I think really a focus on manufacturing can help to grow. I think there are some cross-cutting issues which we have to invest in. That is the manufacturing competencies, the linkages with research and manufacturing and innovation related to that, linkages on supply chain development. But on the other hand, there is also need to really prioritize, because we cannot copy and paste what China has done. There is not the international market that we can there's not a second volume of potential demand that we can tap into in the world, and there is also not a willingness to do that. And we have a huge domestic market that is also underserviced. So it would be much better to try to focus on a few areas where India could be identified to have call it a sweet spot for participation in global value chains, and then we can establish on that. We have we've mentioned the automotive, so automotive components could be one, electronics, textiles traditionally, chemicals. Think about food processing. There's so much potential there. So rather than trying to do everything and sort of, it's not the time in the world situation is against us, and it's also not immediately utilizing the potential that India has in different sectors.
Mr. Kulkarni, my next question is to you. And at one point of time, we had operators like HCL, Zenith, who was making computers, who were in the space of electronic hardware. What happened then? And you did briefly talk about the steps we made probably during the 1990s. What happened then, and why haven't we been able to rectify it now?
So I must tell you the facts. At one time, probably from 1985 onwards till 1998 or till 2000, you could see the emergence of Indian brand owners, from HCL to Wipro. Wipro also was one of the dominant players. Then you had Zenith Computers emerging as one of the top players, HCL. Even HP partnered with HCL, and that time was different. But everyone, the entire industry was looking at the duty differentials. This industry emerged in an era of 200% duty on the finished product. The populated boards were coming at 200%. and unpopulated would come at 50%. But entire industry was looking at the duty arbitrage, and a very substantial duty arbitrage of around 50% to 80%. So that led to growth of assembly. So you would get either in SKD or CKD and just manufacture. But no one actually made attempts to create a value chain. You just get hard disk, motherboard, and some products, just assemble them and save on duty. And that's how that sector would emerge. 2000 onwards, China started growing. Taiwan started becoming an expensive destination. So at that time, India and China had equal opportunities, especially in PC manufacturing. So China started offering substantial incentives. India started disincentivizing. Like, for example, they started creating special additional duty, which was actually very deterrent to the imports. I mean, it was inverted, complete inverted duty regime. Then, somewhere around 2005, India signed ITA 1, wherein 217 products got covered. Obviously, in a zero duty regime, we were not prepared. When we were looking at a huge duty difference, all of a sudden we started moving to a zero duty regime. At the same time, there was inverted duty. China started offering heavy investment linked incentives. So obviously the investment moved towards China. They started supplying you the products at a very cheap rate. So even the multinational brands started taking a very strong position in the country. With ITA, we gave market access to many more players. A lot of companies which you can see today are dominating the market have come during that time. And that's where our policy failed. So manufacturing was a punishment. You had to pay at least 2 to 3% extra over and above your finished product if you have to manufacture here. I think on policy front, we messed up as far as government is concerned. But as far as industry is concerned, none of the industry players started creating a value chain. And we paid a price of it. Everyone was comfortable earning money out of this duty difference. I think it was a lesson. So it's a joint failure of industry as well as the government.
Right. Mr. Chala, I'll come to you. I think Mr. Kunkurenkar puts it very well. But I don't know if you still feel the same way. Is manufacturing still a punishment? I'm sure despite all that auto sector has achieved, it must not be all hunky-dory.
Well, manufacturing is, of course, if I may say, the toughest of all the opportunities that entrepreneurship world offers. And of course, the grass is always greener on the other side. But then, from my own experience as an entrepreneur, and of course as representative of many in different trades, I do realize that manufacturing is the toughest of the game. And don't call it punishment, but then yes, it is something that takes the toll out of an entrepreneur's life. He has to deal with every aspect that a business calls for, and everything else that the world handles, plus the labor and the supplies and the logistics and many other issues, including some special laws that govern only the manufacturing. So in terms of compliances, also his compliances are the maximum. In terms of energy and other related issues, naturally the disruptions also come to such an entrepreneur very, very easily. Any lockdown issue and any such things affect manufacturing the most, because it is something that cannot be done online, while many services can be. So manufacturing is of course the toughest, and perhaps that is why the results are the best.
Right. Mr. Singh, if I can come to you, Mr. Chawla also, talked about it. There are certain regulations and laws which are probably only applicable to manufacturing units. How much of our policies and laws are in tune to actually help manufacturing in India, or are they, in some way just further shackles?
No, of course, I would say that from where we were a few years back or a couple of decades back to where we are now, a lot of things have changed for the good. But we still have a lot of distance to cover if we have to really compete on the global scale when it comes to manufacturing. Now, one of the things, for example, people kept talking about how complex tax structure that we have in the country. Okay, and this was something that was discussed, debated for about 15 years, 20 years, and so on and so forth, till we had at least some kind of rationalization of the number of indirect taxes that we had in the country, which used to run more than 20 at one point in time. And you talk about any manufacturer or any other player who wanted to get into India, they were really afraid of this tax regime. They said that we need to hire a lot of people who will tell us what the tax we need to pay, because we have no clue about so many slabs of, so many structures of indirect taxes and so on and so forth, and the statutory requirements around it and so on and so forth. I would not say that, yes, we have completely kind of taken care of it, but I would say that, yes, we have done quite a bit in terms of when it comes to resolving some of the long-standing expectations that the manufacturing sector had. But still, there is a long distance to go there. Now, let's look at a lot of other issues that the manufacturing companies have. They still have a lot of issues when it comes to land, for example. Anyone who has to set up a new factory, anyone who has to go and kind of get an approval, the kind of steps that they have to go through, and the multiple agencies that they deal with. First, of course, you deal with the central government when you're getting into any, say, you're coming from outside. Then you deal with the state government. Then you deal with the municipal corporations and so on and so forth, depending on wherever you're trying to look for land. So there are a lot of issues which are related to land. There are a lot of issues which are related to labor, for example. A country where even if I don't know exact number, but maybe it's just about 10. If you just have 10 people, then suddenly you have so many other laws which become applicable to you. A union can be formed and so on and so forth. So we have I think a lot of things on the plate which need to be resolved when we are talking about really building that competitive edge when it comes to manufacturing. But hats off, I would say, to entrepreneurs that we have a few of them, a couple of them here have been on a call. I think despite all the hurdles that we see, we still have a manufacturing sector which came up over the last few decades. At least in certain sectors, as we spoke, a sector like automotive, I think we really built the entire value chain. And today, it takes a lot of pride in saying that the total output of auto component manufacturers which are there, the tier 1s and tier 2s and so on, is actually larger than the total output value of the OEMs put together, which speaks volumes in terms of what we have been able to achieve in this particular sector. The idea is that can we replicate this across other sectors as well? And yes, we can wait for all the policies, we can wait for all the laws to change, but I think it's a hand-in-hand thing that has to go and happen. A lot depends also in terms of all the kind of taxes that we have on imports and the benefits that people may have on exports. If you're really looking at kind of ensuring that there is a certain sector which really grows, or there is a certain set of manufacturing companies which really come up in the country, because sometimes people may find that it's easier just to probably bring all the parts and assemble in the country. So if you're really looking at, say, for example, in automotive, if you're looking at EV, then we need to really rethink that how are we taxing all the components which go inside an EV vehicle. That is one which is going to either aid in terms of setting up a large value chain around just like for the ICE engine, we got the entire value chain up in the country. Can we get the entire value chain even for the EV? Or alternatively, we may just become an assembly house, which means that we'll get all the parts from outside, all the value then goes to other countries, and we just assemble the vehicle in India. And assembly is not going to really create jobs, or not really going to create too much of value. So a lot depends on how all these policies, taxes, and other things are seen in totality, I would say.
Right. Ray, if I can come to you, one of the ways to incentivize has always been around taxation, monetary incentives. UNIDO has done a lot of work with micro entrepreneurs, with small and medium enterprises. What are the kind of experiences that you have seen from manufacturing hubs around India? What kind of incentives work better?
Yes, I think this is a very interesting question and a very diverse answer because I think that one of the features of the MSME segment is, of course, also a large degree of informality. And the informality, which comes into to 80 or some say even 85% of the finance and the capital is informal. So all the tax and monetary incentives are not really working for those enterprises. So there's a large segment of the smaller manufacturing, which is by definition excluded. And we need to probably address this because there would be many benefits. We need to convince that there are benefits that are coming into the formality. They can be seen, they can be supported and benefited from that. I think the other part on what is often said, and we need to incentivize and get large companies to come to India, set up manufacturing hubs, and then do that. I think UNIDO has done quite a lot of work on analyzing global value chain companies in Southeast Asia and China, East Asia, and elsewhere. And I think it is easy to do a financial incentive or a fiscal incentive to give a tax holiday or other measures, but they are not really very effective in the longer run. And also the major investors are taking that. You can go, it's the race to the bottom, who offers most. But ultimately, what makes the success of a business, of a global value chain company, is much more than just the fiscal incentives. It's whether there is a potential. And I come back to what Nitin was referring to. We set up a value chain locally, so we can get parts. Can we get connected? What is the security of contracts to be enforced, and other things? What is the manufacturing competences? What is the skills that are out there? So there tends to be a focus on the quick fix, which could be money, but on the other hand, it's very limited. If I come at our own work, there was a lot of talk on the automotive sector already, and UNIDO has worked with ACMA, the Automotive Components Manufacturers Association, for quite a long time on programs on productivity, lean manufacturing, and innovation. And you might say this is the terms which we know from the 1990s. But still, if we now go out to manufacturing firms which are tier 2 or maybe tier 3, and we run a lean manufacturing program, on average, they get about 8 to 15 lakhs savings annually. And you might say that's not something which is on the horizon of the Prime Minister of India, but for a small business, that is real money in the wallet, so to speak. So really programs that focus on productivity, quality, innovation, to improve the effectiveness are still very much appreciated. And I think that also other programs on the related issues, and that maybe links to the whole question on sustainability a little bit, on how do we deal with energy efficiency, renewables. There are many savings opportunities for MSMEs that could be done. But in the overall scheme, like we did in Kurja in Gujarat on the ceramic sector, to bring enterprises together on better technologies, saving money by being smarter. I think that if we really want to grow the micro and small industry segments, that is the way to go to help them to improve their manufacturing systems. If it is about bringing in the large manufacturing or global value chain companies, so bring them to reshore them to India, then we need to look more at the manufacturing and innovation systems and how can we set up, and if we do then a financial or fiscal incentive, can we tie this to saying that, okay, you're now, let's make sure that 40% of your parts are coming within 3 years from India, and what is the government then going to do to help to set up these value chains? So these are very material to business investors.
Right. Then if I can stay on the question and come to you, do you think monetary fiscal incentives will help get electronic manufacturing up in India? And if not, what do you think can be some of the low-hanging fruits that we can tackle?
Yeah. So, in fact, first of all, the policy of protection has to be replaced with the policy of promotion. We need to actually map the proper requirement and support system that is required for the industry. At times, I have seen many states, they have come with their own policies, but there is no clarity on those policies, what is that government wants to offer. Every state has some industrial policy which I have studied, but it's vague. There is no fulfillment of that commitment. I mean, as an entrepreneur, I can't really rely upon that government would really disburse that money to me. I think 90% of the cases, you don't get whatever the incentive offered by government in time. Look at scenario like you want to set up a plant, you need land. There is maximum corruption is in land, and you're getting power connection. Most of the states have issues about power connection. Now, when you talk of investment promotion boards, most of the states now talk about single window system.
Yeah.
But the biggest disaster in the country is this single window system, which has become additional window. I mean, once that window clears it, you again have to go to all other window. I mean, it's big. I mean, it's a joke. So there is no sincerity. First of all, bureaucrats should learn to become facilitators and not control every aspect of business. I would say they are largely responsible for this mess in this country. They are responsible. Let me reiterate. The kind of system that exists, no one is seriously interested in listening to industry and their problems. Everyone tries to come out with some vague policy, announce some crores and crores of incentive on paper. Then the politician will come and give a slogan saying that 10,000 crores, 20,000 crores. And finally, not a single entrepreneur gets even 20% out of it. So if you feel incentives are given, it should reach out to the industry. So the biggest incentive for the industry as of today could be A, you facilitate in terms of infrastructure, operational infrastructure and logistic infrastructure, supply chain infrastructure. That is the key today. Second aspect is in terms of ease of doing business. The ease of doing business in India is a disaster. I do not know on what basis we improve our rank. I don't think just by creating some index and giving some marks, you can't achieve ease of doing business. We have to abolish Inspector Raj. Yes, central government has tried to come out with a lot of things. I compliment central government. Lot of initiatives in company law, lot of initiatives in customs. Certainly, Ministry of Commerce, they need to be appreciated for what they have done. They have liberalized to some extent. But 70% of the job is in the states. Hardly any state or an official wants to give up power. Government should now learn to facilitate, withdraw from controlling. That won't take us forward. China might be communist, but today their outlook is totally like a capitalistic country. They are expansionists today. They've been business. Today, if someone wants to shut down an industry, they would come to your doorstep and ask 100 questions and try to prohibit you from closing, request you, try to help you how to sustain. That's not a case in India. No one bothers. Even if you ask any state government about the statistics in terms of how many units are shut down in last 5 years, I can guarantee you no state has accurate report.
Right. Mr. Charan, what is it that you are seeing on ground? Is it ease of doing business, particularly at the state level, which proved to be a stumbling block for manufacturing units?
Ease of doing business, I remember 6 years back was the prime focus of the government. And they claim that it's still, and in terms from 142nd rank in 2014, it is now somewhere in 60th. Yet at the grassroots, some things haven't changed or haven't changed to our expectations. I agree that government has tried, and they have tried in the last 6 years. One important thing has happened, and that is the technology. So integration of technology with the government systems, that has happened. In fact, once upon a time, private sector would always be ahead of the government. In the last few years, I find that the government has galloped much faster and much ahead of the entrepreneurs world. For example, the GST and its introduction, bringing everyone to the platform. Today, every return from ESI to Provident Fund to TDS, TCS, taxation, virtually everything is online. And so by and large, government has utilized technology, and therefore, maybe a lot of that reflects into their claim of ease of doing business. Now, you can call it an organic course of evolution, that ultimately the whole world is moving towards online things. And yet, I would like to give the due credit to the government that they also utilized the technology and they brought it to the fore. Some of the government laws are very progressive. For example, in Haryana, there is an industrial act now which says that if an entrepreneur applies something online and if the department does not respond to it, so within 45 days, it will be deemed approved. So it's a major law. Now, all that a grassroots level person has to do is just put up an objection on 44th day. So now it is lawfully invalid. So that is why I say that at the top level, there is a serious attempt on bringing in systemic changes. And in fact, many of these changes have been incorporated in the law. And yet, in the system, there are old people, there are young people, and for different reasons, they may still put objections and ultimately force the entrepreneur to still visit those offices and still go back to the previous era. So I'm not one of those who speak always for the government. It is not so. But I understand that some attempt at some, stages and platforms have been made and there have been results. And yet, there are some very serious issues which still plague as badly as ever before, perhaps even worse in some of the cases. For example, now we have a wonderful law. We have a IBC code, insolvency and bankruptcy code. Now it's a very strong law, and an enterprise going bankrupt or towards bankruptcy, creditors can trigger a claim, go to the NCLT, NCLT would liquidate. And so there is a process. And yet, to give you one small example, someone who would purchase, let us say, a land or building from NCLT through an auction and try to restart that business, the departments would still come saying that the earlier entrepreneur had to pay X amount of electricity due. Now the earlier entrepreneur did not know you pay. And unless you pay, we'll not give you power connection. Now, everybody understands that the law, the IBC clearly says that sell the assets to new owners and whatever is the collection realization from those assets, distribute those into the old builder. But at the grassroots, the new investor is still plagued with the same mindset. So there is a challenge. Another huge challenge, and because I come from the MSME sector, is the infrastructure for the manufacturing sector. Let's admit, it takes years to create infrastructure. The land acquisition itself is not that easy now in India. And with the new land acquisition laws and amendments that have been made. So it's not easy for the government now to acquire land and then do it. And for example, I come from Faridabad, and if you look at the Delhi NCR, there are almost 100,000 MSMEs which are in the non-conforming areas. Non-conforming means that someone just brought a small piece of land in a village, set up an industry. Now, it may not have legal recognition because, let us say, the building plan would not be approved. So therefore, that industry would never get a factory license. Therefore, that industry would never get NOC from Pollution Control Department. Therefore, that industry may never get a bank loan. Therefore, that industry will never get a bank government incentive. Therefore, that industry would exist forever, pay all government liabilities, but would never be legally accepted. And therefore, such an industry can be threatened any time by any inspector threatening that I'll close you. And there are 100,000 such industries only in and around Delhi. If you look at the entire nation, it would be millions. And year after year, we are trying to reach out to the government and saying that let's legitimize these industries which are there, because you will take a million years to create infrastructure for these. And by the time you do, there would be as many new entrepreneurs who would have ventured out. So sometimes one has to respect the past. And, for example, residential areas also, sometimes they come up, in unapproved areas. But then finally, in the election days, government would approve some of those slum busties and regularize. So why don't you change the master plan? See, so it's a very slow process. In Haryana, we were able to convince the government. And in 2016, the government of Haryana came out with a notification that yes, they'll do a survey, and wherever there are 70% plus industries, they would convert those industrial areas to industrial areas and regularize those. 2016, we are in 2020. The process of survey is still on.
Right, Mr. Singh, if I can come to you, there's often a toss-up. I think we've had, both our speakers really enlighten us about, the grassroots problem. While we, understand the macro part of it, but on the grassroots level and on the ground, things are a little different. But taking the discussion away from that to, again, something macro in nature, if you look at this year's economic survey, it interestingly talks about maybe trying assemble in India, while we've till now talked about make in India. Economic survey introduces a concept of assemble in India. Do you think that is the right way? And to me, it seems like moving from SKD to ZKD. But what's your view?
No, completely agree. I think, if we are talking really of manufacturing, we need to be doing core manufacturing. Assembly is just an eyewash to say some product with written made in India, because that's what would go into the market saying made in India. But the entire value chain of that, which is really the core, which is where really the manufacturing happens, which is where really the value gets created, which is where really the jobs get created. Unless and until we focus on that particular value chain and ensure that we are focusing on the entire manufacturing ecosystem around it, I don't think so that we can really say that we are making anything in India. So and also whatever we make in India by just an assembly line perspective, it not only will add very little value in India, but just think from a perspective, it doesn't serve the purpose of employment, because you can't generate too much of employment if you're only doing assembly. What will happen is that you will open your domestic market, which is the one of the Ds that the government keeps talking about, the demand and the demographics, which is really favoring from a future perspective. And you are saying that, okay, let me allow all the parts which are being manufactured somewhere else in the globe just assembled in India, so that I can meet the requirements of the demand and I can meet the requirements of the demographic move that is happening. But really speaking, if we have to increase the share of GDP from a manufacturing perspective, manufacturing share in the GDP, we need to focus really on then the core industries. Say, for example, when it comes to textiles, and I say that I will just do garments, I don't think so by just manufacturing garments in India, you're really going to excel in that space. Same is the case in automotive. Just by doing assembly of vehicles, you don't do. The real value gets created at the tier 1, tier 2, tier 3 levels, because that is where you're really doing hardcore manufacturing. The other element that I thought adding to the question that you asked we should focus on is, when we do manufacturing, we should also look at what kind of products are we manufacturing. The important element is, are we manufacturing something which is really high in terms of value, or is it a pure conversion play? Because if it's a pure conversion play, say for example, I'm just doing some very low end products, it could be a small casting or a forged component or a fabricated part, I always keep getting hassled on price, because I always my value always is measured as what is the value added in per kg or per ton. And that does not really give me margins. That does not really create value for me. But if I am creating some product which is really high end from a design perspective, then no one comes and talks to me in terms of per kg, because then they start looking at that product and then say that, okay, what is the value that I need to give you for that product, irrespective of the material content in that particular product. In short, when I'm doing manufacturing, will I do manufacturing of those parts where material is as high as 80-85% of the entire cost, or will I do manufacturing also of those parts where material may be just about 15-20% or 30%, and the rest is all the value addition that I have done because of the innovative design that I have done. Now, we have seen quite a few players in India who have been able to transition this journey and who have got into really high-tech products which they are producing, where they are no longer fixing the price on a per kg basis, but they are fixing the price on the value that they bring to the table. And so moving far ahead from assembly that you spoke, I'm saying that it's not just that we should not be an assembler, we should be doing manufacturing, but we should also do manufacturing of those parts which really add value in terms of the unit price and so on and so forth. Now, what it calls for is huge R&D skills and R&D capability, because unless and until we do a lot of research and design in the country, we will not be able to reach there. Now, let's look at an example. Say we heard a large number of countries as examples on this particular panel. Let me bring another country, say South Korea. We didn't speak about South Korea. Right. If you look at South Korea 20 years back and look at South Korea now, 5 or 4 big giants they created. They of course created a Hyundai, but they also created a LG. They also created a Samsung. So they created a few big giants which are global brands, and they compete with all the big players globally all over. But one thing that South Korea is known for in whatever they have done is metallurgy. They picked up one field, and I mean, that's not the only field they may have picked up, but I'm just taking it as an example. They picked up one field and said that the R&D that they have done on metallurgy side or the material side is really very unique. And you look at anything that they do, the kind of material that they use, okay, is very different from the traditional material that was being used by others in that same space or in the same market, whether it is in the consumer durable space, it is in the mobile phone space, it is in the automotive space. The kind of steel that they're producing, for example, POSCO or Hyundai steel, the kind of steel quality that they produce, fairly significantly different in terms of what was happening globally. Now, that is what is important, that we can't think of hence manufacturing as pure assembly, nor we can think of manufacturing as just manufacturing parts, but we have to think of manufacturing something which is high-tech, which will require a lot of ecosystem to be built in terms of the entire R&D around it, hence the ecosystem which supports that kind of innovative thinking, disruptive thinking from a manufacturing perspective, if we have to really become more competitive on this index.
Right. Thank you. Renip, we're running out of time. So my last question to you would be, from what you've heard today and from what you've already picked up from your stay in India, if you have to make 3 suggestions to, really make India a manufacturing powerhouse, what would that be?
Yes, that's fine. I think I will make it as a priority areas, whether it's a specific suggestion or not, that's to be seen. But I think that we need to value manufacturing excellence and really place something on that we are investing, that manufacturing is not a last resort. It's something that is worthwhile doing, that is appreciated, that you can have a career that is attractive. So this and then we drive the manufacturing sector forward. I think that another area that I would really emphasize, and some of the speakers have also highlighted this in a different way, but I would say the kind of innovation ecosystem around the manufacturing needs to be fixed up, and that is in part it's the primary research which Korea did in metallurgy, but in part it's also product design that we invest in, that not just copy what is elsewhere, but really put some great minds into that, and then we can create value chains in different areas and different products. So the innovation ecosystem and support system is another one. Also get the cooperation happening between the IITs, the other training institutes, the technical institutes, and the manufacturing sector. So we drive this as a vibrant innovation community, because that's what's happening in Japan, Korea, and Germany, otherwise. And then the third point would be really to try to find, to focus on a few sweet spots, as I was referring to earlier on. So where does India have a natural advantage which we could exploit to utilize? And that could be in some established manufacturing sectors, so where automotive is for automotive parts is there. But we could also maybe look at some of the traditional sectors. So we don't always have to look at the engineered products, but what do we have? Let's just take bamboo. We have so much. What can we do with this material? What can we drive an industry around this, or some other products which are around in the country? And that would help us also to connect manufacturing to some of the areas which have now been left out. Take the northeast of the hill states to bring some manufacturing that is sustainable and suitable there. So as three directions, I would say sweet spot, innovation, system fix up, and then recognition for manufacturing and driving manufacturing excellence.
Right. Nitin, if I can come to you, what are 3 things or 4 things that you as an electronic manufacturer would really like to see?
I'll say 3 top things. One is integration. Our federal structure is the biggest problem. So we need to integrate our thought process towards economy and manufacturing. Second, ease of doing business. There has to be complete working on ease of doing business. And third is infrastructure linked to economy. Today we are creating random infrastructure. Many states are creating random infrastructure. It should be focused and strategic infrastructure, which needs to be put in place. And lastly, I must say, all these things, yes, will make wonders for the country, build confidence globally, and will also drive investments, bring in new culture of manufacturing. Yes, we need to work on building complete ecosystem. That is also part of the integration.
Not just mobiles.
No, not just mobile. You need to get into value chain, and we need to build. See, there are hassles. We need to overcome the hassles. Then everyone would invest in the country. Secondly, one of the reasons why IT software industry succeeded from 90 to 2010, they've done very well for the world, is because no politician or bureaucrat knew where to intervene. It was all electronic. So probably we need to take a lesson from that and keep them away. Then the industry will grow.
Right. Great. Thank you. Mr. Chawla, in the automotive space, what is it that you would like to see?
Okay, a few things. One, I agree that we need to bring down the regulations that regulate the manufacturing sector, because most of these regulations, rather than facilitating, are actually the speed breakers, and they slow down the growth. And I am not that I am against regulations. Regulations that focus and that actually facilitate health and safety of industrial workers, protect their social security. That is great. Every entrepreneur is with that. And it's not about asking for a hire and fire policy and all. No one asks for those things. Those are very, very harsh words, just trying to, but I think when I talk about bringing down regulations, then I talk about bringing down regulations that govern the building bylaws or a factory license procedure, or process for pollution, the change of land use, CLU, etc. So some of those regulations must be so simple that it should be, just like very, very easy. So the easier the authorities can make it, the industries will become more and more compliant. Otherwise, I have seen industries running for 20, 30 years, but still in the illegal segment or without a license segment. If I tell you, and you won't believe, but then it's true, that there are more than 10 circulars every day that directly impact manufacturing entrepreneurs. There are so many departments, so many ministries at the state level, central level, from pollution, environment to manufacturing to commerce to GST, etc., that there are more than 10 circulars that directly impact an entrepreneur. And this, what it leads to? It leads to that 80% of my time, which I should actually put in my core area, this 80-20 ratio has reversed. I give only 20% of my time and energy to my core area and 80% to the north. Second important thing that I would like to say is that let us understand, manufacturing sector is something which is tangible. I'm not denigrating, or I'm not looking at any other sector different way, but then at least this is one sector where all assets can be seen tangibly: the number of machines, the installations, the stock, the finished good, etc., which is not possible in many other service sector areas or the IT sector, etc. And yet, the credit flow to this sector is hugely challenged. There are some sectors where credit flow is challenged because there is nothing tangible and banks don't know how to fund. But here, everything is tangible, and yet the credit flow is not very easy. And I'll give a very interesting, thing about this pandemic situation. The government announced a 20% emergency line of credit guaranteed by the National Credit Guarantee Fund, and on all loan outstanding as on 29th of February, provided turnover of that unit is not more than 100 crore. Now the definition of MSME is up to 250 crore. But if your turnover is more than 100 crore, then you will not get this 20% line of credit. You go and fend for yourself. So this is one. Pandemic is for everyone. Lockdown situation is for everyone. Every industry has a cash flow issue right now. Every industry has a supply chain. Every industry needs to take care of their thing. And yet, so government could have said that maximum limit up to 5 crore loan or 5 crore, whatever. There could have been a cap, but saying that if you are above 100 crore, not entitled to 20% emergency line of credit. Second is that if your loans are more than 25 crore as on 29th of February, you are not entitled to emergency line of credit. Come on, someone with 26 crore loan or 30 crore loan also needs emergency fund. No. So these are some of the things that, takes these entrepreneurs back.
Right. Mr. Singh, I will let you have the last word. What would you want to see if we have to get serious about manufacturing?
Okay, so a lot has been spoken already by my three other colleagues. So I'm just going to add into my wish list of 3 more things into that. Okay, first and foremost, I think I would like to see the convergence of the entrepreneurial skill that we have in manufacturing sector in India with the technology brains that we have in the country. And what I mean by that is that if we can ensure that we leverage the learnings from technology solutions around Industry 4.0, artificial intelligence, machine learning, and try and bring that all into manufacturing, because that will position us very, very differently. We already know that, yes, we have deep and very strong knowledge on the technology side. And I, for a fact, also know that a lot of these brains are actually currently working in terms of improving manufacturing competitiveness in countries like Japan, in countries like Germany, in countries like US, and so on and so forth. But why not we ensure that manufacturing, that technology know-how that we have in the country is brought into the manufacturing domain in India, and try and see the convergence of these two to happen, which will probably put us in a different spot. So that's one. The second thing that I think is very important is that for manufacturing to really get competitive from a country perspective, there are 2 or 3 things which are required to happen within our geography. For example, manufacturing of capital equipment. A manufacturer still has to rely a lot in terms of importing capital equipment from outside. And it just does not stop with the capital equipment, because then it goes beyond that. It goes to spare parts requirement, it goes to service requirement, and so on and so forth. So how do we ensure that, say, capital equipments, which is one of the foundation for manufacturing, but we don't seem to have too many capital equipment manufacturers. We have a very large textile sector in the country, but look at how many textile equipment manufacturers or textile machine manufacturers are in the country. Because whenever it comes to setting up a large textile plant, we say, okay, let's go to Germany, let's go to China, let's go to Japan and get all those equipment imported into the country. Similarly is the case with electrical and electronics. That is becoming almost like something which is getting embedded into every manufacturing unit now. But why do we have to import sensors? Why do we have to still import all the electronic components from outside? Why can't, along with capital equipments, we ensure that some of these, which are the bedrock and foundation of manufacturing, get into the country? So that's point number 2 as what I would like to see. And point number 3, what I would like to see is not just make in India. I would love to see make in rural India. So rather than just make in India, can we start to ensure that we drive some campaign on make in rural India? We have a very, very large agricultural base in the country. But in terms of food processing, and I think one of the persons did make a comment, or I think Renee, it was you who said something about food processing. But what are we doing in terms of manufacturing in rural India? Can we start to think about what are those industries that can really come up in the rural market of the country, so that this entire challenge that we have of what does the agricultural laborer do when there is no agriculture happening? You see huge amount of migration from the villages into the cities. And now when there is a pandemic, you find the reverse migration happening, which is people going back from the cities to the rural areas. Now, and it puts a huge burden on all the cities that we have in the country. So how do we focus on the third element, which is make in rural India? So those would be my 3 wish list. Sorry for taking a little additional time, but that's what I would love to.
Great. I think that sums it up really well. And we're completely out of time. So thank you all for being a part of this very interesting conversation. It's clear that we have the right ambition, but we have a lot of work to do if we want to be a force to reckon with in the manufacturing space. Again, a thank you to all the panel members, and it's over to you, Neha, for the rest of the program. Thank you all.
After that very interesting panel discussion, it is clear that India has its work cut out if it wants to be a serious manufacturing destination. However, the next set of companies that we are about to announce have been able to thrive and grow in challenging conditions and economy. In fact, many are in the manufacturing space and their achievements have been absolutely stellar. An important pillar of growth for any MSME is financial growth. How it scales up in size and has adequate revenue to keep the business up and running. Limited access to financial resources, inadequate infrastructure support, and insufficient linkages to domestic and global markets are often cited as deterrents to the growth of MSMEs. But there are companies that have managed to stand apart. These growth champions are companies that have generated revenue growth over a 3-year period, are independent entities, and have primarily demonstrated organic growth. The quest to find India's fastest growing MSME hinged on evaluation that considered total revenue CAGR over the last 3 annual financial filings across all subcategories. The result? We now have India's fastest growing MSMEs ranking. While you will find the names of all the top-ranked MSMEs on ETRISE.com, let us find out who the top 3 are. At rank 3 is a non-banking financial company focusing on bridging the credit gap which has secured the third spot with a CAGR of 543.93% over the last 3 years. Its flagship product, Flexi Loans, is an online lending platform which solves the problem that SMEs face in accessing quick, flexible, and adequate funds for growing their business. Founded by 4 ISB and IIT alumni, EpiMoney Private Limited is the third fastest growing company in India. Let us hear it from Manish Lunia, one of the co-founders of EpiMoney.
ETRISE Top MSME Ranking for choosing us amongst the India's fastest growing businesses. I think this award really belongs to the 200 plus employees, the partners, stakeholders that we have, along with my founding group, and we all thank you for this validation. This validation from such a prestigious media house also actually builds the credibility that we want to bring to the thousands and millions of MSMEs who are then discovering us via digital mediums, because we don't get to meet them, to showcase that we are there to empower them for the growth that they wish to do for the businesses. Thank you.
Moving on, at rank 2, we have a company which encompasses a range of design, engineering, construction, operations, and maintenance of rooftop and utility scale solar projects. Founded in 2013, the company saw a CAGR of 588.54% in the last 3 years. With a client list that boasts of names like Renew Power, Adani Group, Apollo Group, and more, Core Energy India Private Limited is the second fastest growing company in India. Let us hear it from Sushil Sarawaki, Director at Core Energy.
We have been recognized as one of the fastest growing business in ETRISE Top MSMEs, India's fastest growing businesses, and we are very thankful to ETRISE for this recognition.
And finally, at rank 1, we have a company that was founded in 2016 and addressed the lack of lending products for India's large and growing and underserved consumers. To promote financial inclusion, the company has designed a form-free, contact-free onboarding mechanism that transcends education, location, and social barriers. Offering credit in seconds based on its AI-driven underwriting and the consumer's ability and intent to repay, the company serves salaried and self-employed consumers from incomes as low as Rs 8,000. With a whopping growth rate of 883.75%, we give you India's fastest growing MSME, Vivify India Private Limited. Let's hear it from Anil Pinapala, founder and CEO, Vivify India Finance Private Limited.
I'd like to thank Economic Times, ETRISE, for recognizing Vivify India in their top MSMEs ranking as the company that is showing the greatest promise in the financial growth sector. It is a reflection of the work we are doing in the financial inclusion area and the traction we have been able to achieve in expanding credit access to India to Indians who are typically unable to get credit. In my experience working with various underserved communities across the world, what I've realized is one of the most costliest forms of credit is the one that a person never gets. And that's a problem we are trying to solve, and that's the wrong that we are trying to right in our Indian society. And having a recognition like this, which gives us the right impetus at this time to take a leap from here on, and hopefully it also gives us a visibility to attract more customers and keep keep plowing forward with our objective. Thank you, Economic Times. Thank you, ETRISE.
We are now down to the last category of ETRISE Top MSMEs Ranking, and perhaps the most significant one, India's top performing MSMEs. These are companies that have not only grown fast but excelled at almost all financial parameters. From profits to return on equity, these companies are trailblazers by providing great product or services and have shown superior financial efficiency. By outperforming their industry peers, these companies have been able to create value and wealth for all stakeholders. Thus, they represent the best of the MSME sector in India. However, it is not easy to be on this list as every entry passed through stringent judging norms. For India's top performing businesses category, enterprises were assigned a RISE score basis the financial parameters of the last 4 annual financial filings. Every business had to submit its audited financial results, and together with our assessment partner, Care Ratings, a RISE score was developed. This score was based on weightage to the financial parameters like total revenue, CAGR, PBILDT margin, PAT margin, ROE, ROCE, among others. After sifting through troves of data and months of deliberations, we finally have the companies that form the best of the MSME sector. So without any further ado, let us find out the top 3 who made it to the coveted list. Established in 1993 and manufacturing a wide range of motors from its modern manufacturing facilities, the company's expertise in design and product engineering has enabled it to build motors which boast of a good value proposition and secure a 3rd place in India's top performing MSMEs. Offering a comprehensive range of permanent magnet DC motors, boot field motors, gear motors, battery-operated DC motors amongst others, the 3rd on ETRISE top performing MSMEs is Rotomac Motors and Controls Private Limited. Let's hear it from Umesh Balani, CEO, Rotomac Motors.
Thank you, ETRISE, for ranking us as one of the top business performers in the MSME segment in the country. This is a huge validation for whatever we've been doing in the last 25 years. We started this journey with a very strong belief that we would build a company which would be unique in the sense that it would create products which would be highly efficient and would be top of the line and be able to compete with the best in the world. And the journey has not yet ended. This is a validation of what we have done in the last few years, and thank you so much.
The competition was intense in this category, which I think is an apt indicator of the many great small businesses we have in this country. After looking at numerous parameters, it was impossible to choose just one winner. So we chose 2, and that was difficult. From thousands of entries, these 2 companies stand out as winners of the most coveted title in the country. For the inaugural edition of ETRISE Top MSMEs, we have joint winners in the top performing MSMEs category. First up as a joint winner is a company based in Indore which was set up in the year 2010. This company has created a digital energy platform, Grid Connect, to enable electric utilities for optimizing grid and asset management. With a staff strength of 100 people in place, the company now plans to scale up the technology deployment across generation, transmission, and distribution clients across India and globally in the future. The company, which is the joint winner of ETRISE Top Performing MSMEs, is Reconnect Energy Solutions Private Limited. Let's hear from Ram Kumar, Director, Reconnect Energy.
I would like to thank ETRISE Top MSME Rankings to rank us as India's top performing businesses. And I would also like to congratulate my entire RE Connect team for being so dynamic and getting this award. And especially, I would like to also dedicate it to my co-founders Vishal Pandya, Vibhav Nuwal, and Madhusudan. Thank you so much. Thanks.
And finally, this brings us to the last announcement of the day. Founded in 2014 in Pune, it is a global technology consulting and services company that helps organizations build innovative products and solutions using big data, analytics, and the cloud. The company's technology and analytics expertise, coupled with vertical knowledge, powers purpose-built solutions for the client's requirements. The firm's data security product, Cogni, provides compliance, audit, and security teams the ability to discover and take care of sensitive data across an enterprise's data landscape. Ladies and gentlemen, the second joint winner in the top performing MSMEs category is Clairvoyant India Private Limited. Let's hear from Amita Mirajkar, co-founder and CEO, Clairvoyant.
Thank you so much. We are really proud to receive this recognition. We thank ETRISE team for nominating us for India's top performing business category in the ETRISE Top MSME Ranking. This means a lot to us. On behalf of all of Clairvoyant leadership team, I would like to express the gratitude. We have completed 6 years in India and about 8 years plus overall. This nomination means pat on the back for us, and it is a testimony to all the hard work and due diligence done by our team over years. Financial health is one of the key pillars to success of any organization. We are very, very proud to receive this, and this is just the beginning. We have a long way to go. We thank all our employees, partners, customers, mentors for guiding us along the way and for the support in each and every phase of the company. Thank you, everyone.
It was really hard to choose the winners when there were so many amazing entries. We loved seeing all of them. Your creativity, talent, and business acumen is incredible. Well done, everyone. I would also take this moment to unveil the Top MSMEs Ranking e-handbook. The handbook contains the complete list of our winners, their profile, and what they plan for the future. It also has some great articles, from an interview with the MSME Minister, Mr. Nitin Gadkari, to various industry leaders. Of course, you will also get an interesting mix of views from voices that matter. I would urge all of you to download the e-handbook and find out more about the fantastic small businesses that have made it to the coveted list this year. The e-handbook will be available on the program website from tomorrow. This brings us to a close to this very engaging and stimulating event, which has been a clear reflection of the immense potential that the MSME community has to offer. For giant leaps towards economic recovery, the participation of small businesses, is crucial to say the least. I would once again like to thank our partners, Union Bank of India, MITC, Caspian Debt, Coco Port, Care Ratings, and associations like World Association for Small and Medium Enterprises, INC Chamber of Commerce and Industry, and Karnataka Small Scale Industries Association for the support and help that could enable us to take this program forward even in such pressing times. And of course, a big thank you to all our viewers for joining us today. Thank you.